All right. Still got a fair amount of people arriving now. The numbers are growing. We appreciate it. So I'll just give it a, a couple more minutes here to let everybody get on, take into consideration maybe some technical difficulties with those that are working remote, which is the majority of us. We'll just give it a few minutes here for the rest of the callers to arrive, and then we'll get kicked off here about 5 after 1. Thank you.
And good morning to all from the West Coast as well.
Rafael Oliveira, Los Angeles office. Good morning.
Good evening from the Netherlands.
That's
this
right,
is Angelina. Right? Angelina with Optics.
That's right.
Ron, look what you started, Ron. Now we're just everyone's gonna introduce, talk over each other. Unfortunately, I heard Angelina though. Very nice to have you on the call. Thank you, Pims from the Netherlands. Thank you for joining. This is definitely a global discussion, and I will, unfortunate to you guys, I will show my face here shortly, so be prepared.
Are you serious? Yes.
Oh yeah. Oh yeah.
Come on.
Yeah, most of you have already seen it, so, and in person. But we'll just, the numbers are climbing. We had a very good turnout, so I'm just gonna, again, just wait a few more minutes for the remaining callers to arrive, and then we'll get this kicked off. Oh, and just a quick mention for those that are already on the call. If you could please, and most people know, especially since this is a new normal, to please mute your phone or your laptops or whatever device you're utilizing to listen and speak through. That way there's no disruptions or interference. Thank you.
I guess we're experiencing some in the background.
Yeah, that's what I was mentioning. And once we get totally kicked off, I'll make a mention again to please, put your devices on mute so we don't get the interference and all the background noise. I hear a party going on right now.
Like kids trying their limits.
I mean, I enjoyed the sound. Somebody's having a good time. Yeah, I guess I can mute everybody.
I think it's Patricia S. Kirby.
Yeah. Patricia Kirby, can you please mute your line, please? Perfect. Thank you very much. We appreciate it. All right. And up to 50. Patricia, please mute your line, please. Patricia Kelly is as it's showing up. I appreciate it. All right, just one more minute here. We've got 50 people on. There's going to be a few more probably adding in as the call goes on. So just one more minute and we'll get kicked off here.
Alexa, stop.
All right, then I'm going to get this started. Let me go ahead. Oh, the moment. All right. I'm sure you guys can now see me. I do apologize again, but I do as well as I can, covering up with as much beard as possible. So again, we have a majority of the callers on right now. We will be expecting some more to join as the session moves forward. But first, I wanted to take a moment to thank each and every one of you for showing interest in attending this Morrison Express Corporation compliance webinar. My name is Kevin Cordes. I'm the Director of Sales for Morrison Express USA. If you guys can see my screen, I am not the gentleman, that good-looking gent there on the flyer. We just have worked together for many, many years, and we go to the same barber, you know, so, which, as we know, has turned to be quite advantageous right now, as most of the barber shops are closed down. So I'll be introducing Mr. Ron Levy here shortly to take over the discussion. And again, if you're on the call, please do mute your line. That way there's no interference. We appreciate it. So one thing I wanted to mention, obviously, during these very unprecedented times that we're facing with the pandemic, it's very beneficial to have technology at our hands where we can still stay connected and productive and allow for these opportunities for further growth and information sharing. Today we will be covering compliance with a focus on imports into the U.S., but there will be some discussions on outbound from China as well, specific to the PPE product. We have the 4 topics listed on the flyer right here. Updates to the China tariffs and the growing list of exceptions, which could give opportunities for tax refunds for already imported cargo. As stated, the procedures for entry of COVID-19 relief supplies, with a brief touch on the export regulations and requirements as well, specifically out of China, where we've seen majority of the cargo movement. Usage of forward trade zones to your advantage, and return goods, requirement for duty-free treatments of goods exported and then returned to the U.S. What I will say is, as we are facing very difficult times as a nation and globally, we are taking financial impact as well as a company. And with these discussions here, hopefully there's some opportunities for ability to have cash flow come back into your company, ways of creating cost savings initiatives as well through compliance, because no matter what we're facing as a nation together and as a world together, compliance is still critical in order to keep our doors open once they are able to fully be reopened again. And we can go back to the old normal as the life used to be, and get away from our new normal that we've been thrown into. So that is the purpose of this webinar right now, and to also, again, keep the connectivity with our clients and prospects and our entire Morrison Express team. I would like to then introduce Mr. Ron Levy. Just to let you know, we have broken it up into the 4 sections. After each of the sections, we will have the Q&A. So I will go ahead and post if you can see the screen here. While Ron is going through the individual sections, please feel free to email me any questions that you have. My email address is there listed. It's kevin_cordes@morrisonexpress.com. So please feel free to send me any questions while Ron is going through the session. And then we will manage the Q&A after each of the sessions is concluded, keeping it within the time parameters as well. Any questions that come after the fact or may not be able to be answered at that time, we will ensure that they are answered. We are also recording this webinar as well, and we will be able to send out to you along with the questions that were not answered previously. So please do not hesitate to send to me, and I will get it over into Ron's hands to ensure those are properly answered. So without further ado, I'd like to turn it over to Mr. Ron Levy, who is our compliance director at Morrison Express Corporation, with well over 25 years in the industry. This gentleman knows compliance as a true expert, and look forward to the information that he shares with everybody. So Ron, I'm going to stop sharing my screen and sharing my face, and I'm going to turn it over to you. So thank you.
Great. So let's see. Share my screen now.
Not yet, Ron. Yes, we do.
All right. Are you guys can see the presentation now?
Yes, sir.
Okay.
Yes, sir.
So the first of our four presentations is on hopefully a subject that will be beneficial to a good chunk of the parties online, having to do with the Section 301 China duties, the additional tariffs as a result of the ongoing trade war between the U.S. and China. And the focus of this presentation is on products which are excluded from those additional duties, most of those duties which are 25% additional duties. So we want to focus on those exclusions as a potential cost savings to our clients. So general background, we've had these Section 301 duties for goods against China for the better part of the last 2 years. And as time has gone along, there's been a bunch of lists, and including how they're administered. There were initially an initial list that came out, and then a second and third list, and then a fourth list in 2 batches. So those were the initial rollout of the China duties. And then there's also been a lot of these exclusions that have been trickled out in lists as well. So we'll move on to the next slide. So if you don't know what Section 301 is, Section 301 was part of the Trade Act of 1974 that authorized the president to take certain appropriate actions, including tariff-based and non-tariff-based retaliation against countries that had unfair trade practices. And in the case of the Section 301 investigation involving these China duties, it was determined that China's acts and policies related to the transfer of technology and intellectual property and innovation were unfair and discriminatory. Bear with me a second. Sorry about that, guys. I'm having some issue advancing the slide for some reason. It was working just... Anyway, so now we're back. Thank you for your patience. So the first lists were implemented in July 2017, and subsequently we've had, all these lists that we're talking about. We've been checking to see if the tariffs apply. And just to be clear, as many of you already know, the tariffs only apply for goods that are made in mainland China and not in Hong Kong or Taiwan. So lists 1 through 3 that were published are 25% duty. Lists that were published on list 4A were originally implemented at 15% in September of 2019, and now they're lowered to 7.5% as part of that phase 1 trade agreement that we entered in with China. And then list 4B was suspended indefinitely. So hopefully we will never see the implementation of list 4B goods, which was a very broad list. So now getting into the exclusions, which is where we can avoid those tariffs and hopefully save us some money. So these have been trickled out in several lists. There were 8 rounds of exclusions against the list 1, 3 rounds against list 2, 11 rounds against list 3, and 3 rounds against list 4A. All told, there were 25 separate lists of exclusions. So the way that these have sort of trickled out, every other week, or sometimes 1 in a month, sometimes a few back to back. It's been very challenging to administer and keep up with all the different products that may be excluded. Some of the trade attorneys like Sandler, Travis, and Rosenberg, and George Tuttle and others have published combined lists of the exclusions, which has been very helpful for us as brokers to make sure that we can check without having to go through 25 different lists to see if a potential HTS or a product is specifically excluded. The combined list is over 240 pages long at this point. In some cases, certain HTS are entirely excluded, which makes it very simple. As long as the product is included in that single HTS, we can see that it's excluded. But more commonly, it is a product-specific exclusion. There were several exclusions that were issued in late March, and many additional products that were not previously excluded are now excluded. Generally, the exclusions were initially granted retroactive to the date that the tariffs were in effect, and were granted for 12 months from that date issued. So because of the way these exclusions have been published incrementally, there's also different dates on when those exclusions expire. And some of those initial exclusions, which were granted against list 1, expired, and some of them were renewed. But in some cases, not all of the products that were subject to exclusion were renewed. So it's been kind of an ongoing battle just to know which products, carried over. Maybe they were, not subject to the additional duties because they were excluded. And then, maybe at the end of 2019 or early in 2020, they expired. And so it's been sort of an ongoing struggle just to keep up with it all and to see on a case-by-case basis which exclusions are still applicable. Fortunately, most of the exclusions which were initially granted have been extended and renewed, but there are products that fall off of it. So it's just, again, a constant case-by-case review. So just for your reference, every time there's a new exclusion published, Customs will update this sort of table, and it has the list of all the different rounds of when the tariffs were published, and also when the exclusions were published, the publication date, the effective date of those exclusions. And you'll notice that the effective date generally goes back to when those tariffs were implemented. So, publication date for the 7th round of exclusions on tranche 3 was January 6th, but was effective September 24, 2018, going back to when those tariffs were initially implemented. And then there's an additional provisional HTS number for those specific exclusions, and it has the information on, which customs systems message it was announced to the trade. So they keep updating this table. And so I don't want to go through the whole table. I just wanted to show you this kind of lays out how how all this information has come out incrementally in drips and drabs, and how these exclusions are retroactive. So some of the key product groups that have exclusions are auto parts, but of course not all auto parts, computer parts and accessories, including monitors and smartphones, certain electronic components like diodes, transistors, rectifiers, certain textile and clothing products, certain COVID-19 related products like single-use face masks, and certain household goods and furniture, and many, many others, way too many to mention individually here. And so the exclusions are really about product-specific details. So here's just a few small examples. If you're importing plastic gaskets, washers, and seals, great, they could be excluded. Your HTS assigned is 39, 26, 90, 45, 90, but the devil is in the details. In this case, the exclusion applies to gaskets, washers, and seals other than O-rings of silicone plastic, each weighing at least 5 grams, but not more than 400 grams. So you can see the level of detail that we often will need to know whether or not a product is excluded, because it's not just as simple as seeing that the HTS is on the list of exclusions. In our brokerage system, one thing that helps us is when a tariff is tied to these provisional tariffs, our drop-down menu will appear with the potential Chapter 9093 provisional HTS numbers. So it's a good reminder to our broker team that an exclusion may apply. But of course, we can't assume that the exclusion applies. We have to work with our clients to get the instructions on whether their specific product applies. And so how we try and assist is, especially with these being retroactive, we try and assist our clients by providing HTS line level reports and also information about specific tariff exclusions. So it's challenging for us to always know which of our clients may be affected by all of these ongoing and changing updates. But where we can, we've tried to reach out to clients and do reviews of their tariff line reports against the list of new exclusions. We did that for several clients for the exclusions that occurred in late March. And as a result of that, we've identified entries that were targeted for potential refunds. So it's just been interesting, as it seems like, every week or every other week there's another list. So we have to constantly run reports, and we also hope that our importers, many times they're also following the news of this information very closely, and several of our clients will reach out to us and ask us questions about whether or not their products apply to the exclusions and whether there's an opportunity for refund. So in the case where there is an opportunity for refund, usually we're looking at two potential processes. One is for post-summary correction, which is simply the refiling of the entry summary details, and also the protest process. And which process applies really depends on the time and date of the entry and whether the entry is liquidated or not. The liquidation process is when Customs considers the entry and the deposit of the classification and deposit of duties and value declarations to be finalized. So generally, between those two processes, we have an opportunity for refund going back approximately 16 months from the date of the original entry. So in the case of post-summary correction, we can file it generally any time before liquidation. It used to be limited to like 270 days, and then it went to 300 days, but generally speaking, we can file it prior to liquidation. And liquidation generally happens 314 days from the date of entry. And generally when we do this, when we file a PSC, we usually request accelerated liquidation. And the reason we do that is it puts it toward the front of the line for Customs to review the correction request. And also once the correction is accepted by Customs, Customs will then move up the liquidation date so that they can get the refund issued and sent to the importer of record. Usually this process takes 4 to 6 weeks, but the time frame for the processing of the PSC and the issuing the refund will vary depending on CBP staffing and the volume of refunds that they're processing, the volume of PSCs and post-entry work that they're reviewing. Every time there's a new list of exclusions, I'm sure that within a week or two after that, Customs starts to get flooded with a new batch of PSCs and protests for them to review. In the case of protests, protests can be filed for liquidated entries up to 180 days from the date of liquidation, or approximately 6 months from the date of liquidation. So for paper filings, the date of the protest is the day it's stamped in and received by the Customs office that receives the protest. And electronically filed protest, the date of the filing is the date that the electronic protest is accepted by CBP. At Morrison Express, we generally file all of our protests electronically, and the benefit of that is that there's no issue of when the protest is being clocked in. We get an immediate receipt back by email by Customs, so we know that really within seconds, almost instantaneously after we send the protest out at Customs, we get an acceptance message that knows that we're clocked in and we can avoid being time barred based, avoiding the issue that could happen if we sent a physical copy of the protest and it sat on a Customs officer's desk without being clocked in. A protest is a higher level of filing than a post-summary correction. It does carry a certain amount of legal weight to it. It can be used as legal precedent for classification issues. And so it does carry a similar weight to an HQ classification ruling. So for that reason, when we do file protests, we do want to make sure that we have substantial and adequate information to make our case. In some cases, we could file a protest and the protest could be denied, and it's not necessarily that the argument is wrong or that the goods don't qualify for an exclusion or for an HTS classification, but maybe not enough detail to prove the case was made. So sometimes a protest could be denied based on just not enough information provided in the protest. So depending on the level of details required for the product-specific exclusion, we'll be reaching out to our clients for product-specific details. In many cases, commercial invoice description is not enough. We may need product literature or specific product description details, and that could be done in a memo or a letter or any written form that we can get from the clients to work into the protest or the PSC filing. So the information should support both the original general HTS classification as well as the product-specific exclusion. So Customs has a page dedicated to this issue, and they've also issued an FAQ document on the Section 301 tariffs. as I mentioned, STR is just one organization of a few that have done a good job of updating and posting combined lists. So I'm not trying to give any recommendation to them as a law firm or entity, but I think they are a well-known and well-respected firm, and they've done a good job of updating their tariff actions and resources webpage. So that's another good resource, along with many others, including the Customs official webpage that has information on this subject. So that ends the first little section, the first of the 4 presentations we have. So if we have some specific questions related to this topic, we can address those now.
All right. Hey, thank you, Ron. We appreciate it. Actually, a silent crowd, a quiet crowd, which is pretty typical. We see it on most webinars, seminars, etc. People kind of take 1 or 2 people to get it rolling. Yeah, there we go. Go ahead then.
Hey, hi, Ron. How are you doing? Rafael Oliveira from Los Angeles office.
Hi. Thank you for joining.
Hey, no, my pleasure. Yeah, it's actually a pleasure to work with you in our compliance and brokerage department. Very knowledgeable, and does help us salesmen out there very much. So the question I have is, I do understand what Section 301 is. So it seems like based on limitations and numbers and the refunds, pre and post filing, it's like a GSP, right? A Generalized System Preference program, right? The old Special Program Indicator, the SPI. It's kind of the same thing, right? This Section 301, but it's not based on commodity like the GSP or the SPI, right?
Yeah, I would say the GSP is a little bit simpler because it's purely tariff based, but with the GSP that comes into play the country of origin and the origin rules, whether there's regional value content for the country of origin declaration. So it's a little bit different, but what it has in common and what you're right about is that both provide tariff relief. It's just in this case, they make us pour through all the details and the minutia of the product, and depending on what the product is, first we have to know enough information to support the HTS classification, and everything that should be simple is more complicated, or you think that something is just a bolt or a screw, but for HTS classification, you might need to know, is it longer or shorter in length than 6 millimeters, the width of the shanks or threads, and is it a hexagonal head? Or so even simple things like hardware become these issues where we have to look at details, and it's just a mystery to all of us why certain details are required, and in other cases why it's just very clean and simple. In the case of some of the video monitors, it's just a matter of the size of the diagonal of the LCD display, and it's very simple to know if a product qualifies for the exclusion or not. And in other cases, you've got to have the net weight, and you've got to know the material it's made of and other details. So it's just interesting and it goes to the strength of the details provided by the importers who applied for the exclusion. And in terms of HTS, it just goes to what groups lobbied Congress to have provisions written a certain way. So I don't know how or why it all works out and why certain information is requested, but we just know based on the provisions themselves what we need to get as far as information. So we apologize for the level of detail we sometimes have to ask for, but we're only doing that because we're trying to help and trying to make sure that we can provide enough information to make it easy for customs to say yes and issue the refunds or support that the exclusion applies.
Right, that we have a full brokerage department, at their disposal. So the other question I have would be, so GSP and those SPIs, they are reviewed every year, right? So this Section 301, it was created in 1974, and as long as applied by our Chief Commander Officer, will stay in place without renewal by December 31st, for example?
Well, each of these things sort of have their own life. I mean, these tariffs for China were implemented in mid-year 2017, and they were enacted based on a trade act and powers granted the executive branch of the U.S. government from that trade act. So, and then these tariffs themselves can be rescinded, if there's a phase 2 and phase 3 trade agreement with China, then, hopefully these at some point will all go away. And then in the case of GSP, Congress has voted to renew these. There have been cases where GSP expired, and then there's been cases where GSP was renewed and it was renewed retroactively. So the way that these things have been administered have created this sort of atmosphere where, customers and importers have had to advance these duties, and then, they may subsequently get refunded, and it's so if they never existed in the first place, or if GSP had been renewed timely, it would have saved, our brokerage teams and U.S. Customs personnel a lot of work in administering the refunds and processing all of these things. But, we just roll with how it comes, and we just try and stay as up to date with this changing information as we get it.
Understood. Ron, as always, a pleasure. Thank you very much.
Thank you very much.
Thank you, Rafael. We appreciate it. Thank you, Ron. And for those, again, if you have any questions, please feel free. We'll stay anonymous. We know compliance is a very complex and detail-oriented part of our industry and our lives as professionals. So please do not hesitate. There are no dumb questions. And feel free to send it over to me. That email again is Kevin_Cordes, CORDES @MorrisonExpress.com, and we'll get it over into Ron's hands to answer. And thank you again, Rafael, for the questions there. We appreciate it. And as we know, for those China tariffs, they are constantly evolving and changing and adding exceptions that could definitely impact your company's cash flow through refunds that Ron went through, and also future imports as well. So it's obviously very critical to stay abreast of all the changes there. And even after this event here, any questions that need to be raised can be absolutely submitted through to myself and Ron for expert responses from him, not me. I'll make sure it's in the proper hands so that you can properly operate your company and speed up through your teams as well. On that note, I'll turn it back over to Ron so we can move to section 2 of this compliance webinar. Thank you.
Thanks, Kevin. So this next presentation is the longest of the 4 because we did add some additional information for the late breaking news that happened Sunday night and was explained later this week. Originally, this presentation was strictly on guidance of personal protective equipment and guidances we've received from Customs and FDA. But we did add some additional information related to the duty deferral, the 90-day duty deferrals for importers that were severely impacted by COVID-19. So these slides, we ended up adding several slides at the back end of this presentation to cover that, since we felt it was very topical and newsworthy and hopefully of interest to you guys who joined this presentation. So we're just going to cover the PPE and medical goods section first, and then we'll go through the information on Customs' announcement of the 90-day duty deferral for those importers that qualify. So Customs, in assistance with FDA, they issued the Customs System Cargo Systems Messaging Service message about information for filing personal protective equipment and medical devices during the pandemic. And they also, Customs has tried to help clarify FDA's messaging and get it out to the trade through this messaging system. The key takeaway that we need to look at here is when we're dealing with imports of these masks and other personal protection equipment is that FDA distinguishes between the PPE that's for general personal use and that equipment that's labeled and intended for medical use. So we'll get into some of that detail now. The good news is for the masks that we're generally wearing as we're going to the grocery market and we're going and doing our errands or walking through our neighborhoods or working in our offices, is that personal protection equipment is not intended for medical use and it's not regulated by FDA. So even though they share the same tariff classification, if the goods are just for personal, non-medical use, we can disclaim that these tariffs are flagged as FDA may be required. So knowing that it's just for personal use and not for medical use, we can send Customs a disclaim, which allows us to send the entry with no FDA data. So we've had many shipments of masks where we've been able to do that and clear these goods through Customs very quickly without any FDA data being sent. And then there are products that are intended for medical use. And for those cases, FDA has issued special procedures to expedite the entry and limit the data necessary for FDA release in order to expedite the release, review, and clearance of these goods to get them where they need to go during the pandemic. So FDA issued emergency use actions, which authorized us as brokers to send much more limited data than we would normally have to send to get these devices cleared. So under an intended use code of 940.000, it's telling FDA that this is being classified under the emergency use action for compassionate use, emergency use, and it means that we don't need to send some of the product registration and details that we would normally send for something that's classified as an FDA device. Normally, some of these respirators are Class 2 FDA devices that require device establishment registration by the manufacturer, device establishment registration by the importer, device listing numbers specific to the product, and pre-market notification numbers. Those are those 510K notification numbers. And in this case, it has become optional when we pair the FDA entry with that compassionate use EUA intended use code. It means that we just need to send that along with the FDA product code. And so FDA has basically waived review and requirements of those registrations temporarily to get these goods cleared during the pandemic. And FDA's guidance document has stipulated that the labeling requirements must still be followed, but they've relaxed the registration and listing requirements. And so this, again, has been an ongoing changing thing in terms of what's under the emergency use action notices. But as of yesterday, this is the current list of products that are currently authorized by an EUA for that expedited process. And it now includes non-NIOSH approved respirators, as well as the NIOSH approved respirators, which is approval by the National Institute for Occupational Safety and Health. Face masks, which are non-surgical, diagnostic test kits, face shields, ventilators, infusion pumps, and you see the full list of items listed there. So here is some of the key product and appropriate product codes that would be currently authorized under the EUA: the diagnostic test, the mask and respirators with the product code 80NZJ, which is for the N95 masks, the non-NIOSH approved disposable filtering face piece respirators have now been issued a new product code, 80QKU, and there's a full list of the EUAs in place on the FDA website. So this presentation, we're kind of focusing on some of the details related to the masks and respirators because we've had so many shipments and inquiries related to those goods, but there are other items that are also listed on the EUAs. And goods that are not part of an EUA can still get some similar streamlined treatment under FDA's enforcement discretion policy. So FDA has really taken the approach that they want to get these goods in, and they've taken steps to use enforcement discretion to get in as many of these goods as quickly as possible so that our healthcare workers and the people that really need this type of equipment can get them. And so originally there was an EUA listed on March 28th, and it specifically listed the N95 respirators that were equivalent from these other countries: Australia, Brazil, Europe, Japan, Korea, and Mexico. It specifically excluded and did not include China. And so originally, I think there was some confusion over whether or not the Chinese masks, the KN95s, could be brought in. But since then, there's been an additional EUA issued April 3rd for the FFR filtering face piece respirators from China. And these disposable non-NIOSH approved respirators made in China can be also brought in under an EUA with streamlined entry data and treatment if they meet the following criteria. They've got to be manufactured by an entity that holds one or more NIOSH approvals for other models of FFRs, or it has a regulatory authorization under jurisdiction other than China that can be authenticated and verified, and that it demonstrates acceptable performance to applicable testing standards. So basically, FDA is interested that these are legitimate masks that will work, but if they haven't been through the testing and approval process, FDA doesn't mind to allow these in and to give them the expedited treatment. So the ACE is the system that we transmit our brokerage data to. The transmission requirements have been laid out by Customs and by FDA that we use the program code, the appropriate processing code and intended use code, and then the appropriate FDA product code. So basically, FDA is saying that we can use the EUA intended use code for any of the products that are listed on the CDC website. If it's not listed as one of the products on the CDC website for emergency use action, then the product, the intended use code, the 081.001, would require all of the normal registrations that are normally required by FDA. So FDA also has an enforcement discretion policy, which has a different intended use code, but also allows us to transmit the FDA data without the additional registrations, such as device establishment registration, device listing, and pre-market notification. Under that enforcement discretion, those additional registrations are also optional. If you do have those registrations and you provide them to us, we would transmit them because it would make it more clear to FDA that the goods are qualifying goods and should be cleared. So there are a list of guidance documents for specific products related to COVID-19, the face masks and respirators, but also there's guidance documents from FDA on the import of ventilators, non-invasive remote monitoring devices, the diagnostic tests, and a full list of those guidance documents on the FDA website. And that information is changing all the time and being added and amended to. So, you know, I foolishly had drafted this presentation last week and then had to amend it yesterday as, you know, new information came in. So it's literally something that could change on a daily basis. But hopefully there's enough of these EUAs and actions in place now that, you know, the trade and the government is ready for the influx of these goods that will continue to flow. Just not to get too much into the weeds on the different masks, but there are different categories of masks. And FDA categorizes them based on the definitions of how FDA defines the face masks, face shields, N95 respirators, whether they're intended for medical use, whether they're not intended for medical use, whether they're intended for medical purpose, not intended for liquid barrier protection, or whether they're intended for liquid barrier protection, whether like face shields are intended for medical purpose. So for a full list of those definitions, there's an FDA guidance document that has all the full definitions, and I've got some of those definitions in the upcoming slides. So face masks, face shields, and respirators are considered medical devices when they're intended for a medical purpose. And FDA defines the medical purpose as prevention of infectious disease and transmission. And face masks, face shields, and respirators are not devices when intended for non-medical use, like for use in construction. So when we're evaluating whether or not they're intended for medical purposes, FDA considers principally how they're labeled. Are they labeled or otherwise intended for use by a healthcare professional? And if they are labeled for use in a healthcare facility or environment. And also FDA looks at whether or not the masks are treated with any other substances, whether they be drugs, biologics, or antimicrobial, antiviral agents. There's different product codes for respirators and masks if they include an antimicrobial or if they don't. So again, we get into kind of some of the minutia of how we classify it and the data needed to clearly describe the goods to FDA. So for FDA's purposes, a face mask is a mask with or without a face shield that covers the user's nose and mouth, and it may or may not meet any fluid barrier or filtration efficiency level requirements. A face shield is the plastic, usually plastic covering that protects the user's eyes and face from fluids and liquid splashes, other potentially infectious materials, and it's generally situated around the band of the head, kind of like wearing a visor, only with the shield in front of the user's face. And then a surgical mask covers user's nose and mouth and provides physical barrier to fluids and particulates. And face filtering, the FFRs, the filtering face piece respirators, are devices that are disposable half-piece, non-powered, air-purifying particulate respirators intended for use to cover the nose and mouth of the wearer to help reduce exposure to pathogens. And then we're getting to the close of these definitions. An N95 respirator meets specific testing and filtration requirements, and those requirements are outlined in regulations. And there's the NIOSH approved N95 respirators, as well as the non-NIOSH respirators. And then surgical N95 respirators have another set of testing requirements. So how it's labeled and which specific testing requirements are met, to determine whether it's considered a surgical N95 respirator or an N95 respirator that might just be for personal use versus surgical use. And for medical use mask, the type of mask will determine the product code and whether or not it goes under the EUA or enforcement discretion processes. So covering all that stuff of all the different details that we would ask the clients about what type of mask they're bringing in, a lot of times the commercial invoice wouldn't be sufficient, so you may get follow-up questions just so we make sure that we enter it with the correct details. But the other piece of news that has been of interest is China's actions on regulating the exports of these medical products. Effective April 1st, China began enforcing export requirements on medical products related to the COVID-19 pandemic. And the following products require certification from testing laboratories, copies of manufacturer's business license, manufacturer certificate from China's National Medical Products Administration. So those products are the COVID-19 test kits, ventilators, protective clothing, protective masks, one-time use medical masks, and infrared thermometers. Previously, exporters of these type of goods were only required to work with the importer destination to make sure the product was compliant with the relevant requirement. Effective April 1st, licensed manufacturers that export these products must have their licenses ready and have product tested to be eligible for export. And the trading companies that ship these goods must be in possession of the manufacturer's business license and the NMPA certificate as well as a certification from the authorized testing lab. So here is some information we got from our Chinese origin teams on what they're asking the exporters to provide. In addition to the documents that I mentioned, there's other suggestions of what the exporters should be asking the factories to provide to them, including their permits to manufacture, quality inspection reports, product manual and labels, product batch number, pictures of the product, quality safety statement, medical device registrations, and statement of whether the goods are medical goods or non-medical goods. And here's other examples, requesting that statement of it's medical or non-medical. And then here's also just an example of qualified goods that are properly labeled with clear information versus unqualified goods that don't have the required labeling. So one last point about the FDA is when we're importing these masks, especially if they're medical masks from China, FDA is mainly interested in reviewing that the good is a legitimate product and not a fraudulent product. So because of that, if there are product photos or pictures of the labels that can be included with the documents, we can upload that with our documents to FDA's ITAC site, and it's a good opportunity for us to show that they're legitimate, and that will help speed the release as well. So additional resources, Customs has published the COVID-19 guide that shows the partial HTS, 6-digit HTS for several products that will be imported during the pandemic, including the test kits, face and eye protection gloves, thermometers, sanitizers, CT scanners, ventilators. And then in order to streamline communications and support the trade, Customs launched a COVID-19 update and announcements webpage specifically dedicated to this type of trade-related information. And so here's just an excerpt from the CBP guide, and you can see that they haven't provided the full HTS, but they have provided the 6-digit HTS of all of these products. So it's a good resource to have as a good starting point if you're going to be shipping these types of products. All questions to FDA regarding the enforcement discretion and the EUA instructions for product code assistance, set up a email inquiry, COVID-19 FDA import inquiries at fda.hhs.gov, and also a phone number for inquiries. FDA may request additional information on a case-by-case basis before giving its advice on admissibility. And then also in the slide is the web address for the guidance documents. So The big piece of news that came out Sunday night is the announcement of 90-day duty deferral for payment of certain estimated duties, taxes, and fees. And it's for importers experiencing significant financial hardship in the pandemic. The temporary postponement applies to formal entries, whether they're withdrawn from warehouse or whether they're withdrawn from FTZ or just entered upon import into the U.S. CBP will not return deposits of any duties, taxes, and fees that have already been paid. So the temporary postponement has its limitations. It does not apply to certain entries that include anti-dumping or countervailing duties. It doesn't apply to duties that were assessed due to the Section 232 aluminum and steel duties. It doesn't apply to Section 201 trade remedies on solar cells, and it doesn't apply to the Section 301 China duties. So if an entry was made, a shipment was cleared, and it was subject to the additional duties for any of those trade remedies, it would not qualify for the 90-day duty postponement. So the importers that will qualify have to show that they have incurred significant financial hardship. And customs defines that by gross receipts less than 60% of the gross receipts for a comparable period in 2019. And also, these the goods that are eligible for suspension of the duty payments are for goods that were from March 13th through 31st and through the month of April. But because they only announced it Sunday, it's really a kind of a limited time period and limited opportunity unless this 90-day deferral is extended and goes into May. So it'll be interesting to see how that happens. There has been pressure from the trade on the U.S. government to give tariff relief to importers, and they did finally do it, but they did do it in a way that really limits how we can take advantage of it. So in order to qualify, an importer doesn't need to file any sort of application or documentation with customs, but they must maintain the documentation in their books and records to establish that they meet the requirement for relief. And customs may conduct reviews of that documentation at a future date. So what's kind of interesting or worrying is that we have no idea how customs is going to enforce the compliance part of this, at what point they may look into this. And it could be through an audit, it could be through a request for information, it could be through a resolution request. So they haven't really published how they're going to do these sort of compliance reviews, and they haven't really given too much information to the trade on how hard they're going to enforce the compliance part of it. But I would just caution people to be ready for that if and when it happens. They have said that no interest will accrue for those duties that are deferred, and that no penalties, liquidated damages, or other sanctions will be imposed as a result of importers taking advantage of this, as long as they are being compliant with it. The temporary postponement only applies to those shipments, duties, taxes, and fees, and it doesn't apply to any other outstanding bills, any other bills related to liquidation or re-liquidation of previous entries. So if you have an open customs bill, you do not get relief under this 90-day postponement. It's only for these current entries within the window that has been designated for the 90-day duty postponement. So one of the key things is that if an importer is going to take advantage of the 90-day postponement period, they need to make sure that the entries do not include ineligible merchandise. So if an entry is filed and it includes merchandise that's subject to anti-dumping, then that entry would not be subject to postponement. Customs is allowing us to split entries, so you can have a single shipment and do 2 entries against that shipment, one for the goods not eligible and another entry for the goods which are eligible. So again, it makes it a little bit messy in our brokerage filings and trying to determine how to split up these entries. The best case scenario would be having ineligible goods on a house bill. But anyway, we can split those shipments into multiple entries if we need to. So here are examples of the deferred payment timeframes. If duty was due April 30th with the 90-day postponement, the duties would be payable and due by July 29th. And then under the monthly statement process for those importers that participate in periodic monthly statement, the postponement may simply be up to 3 months as defined by the 15th working day of the month of the payment month. So if the original due date was April 21st, the 3-month postponement would take us to July 22nd. And these are based on the designated PMS withdrawals for the monthly statement processes. So it was just on this last Sunday, April 19th, that Customs began deploying the updates in their system to accept these transactions with more flexibility on the payment dates. And so that was just rolled out and announced on Sunday. Further information announced to the trade just a couple days ago on Monday. So entries that are removed from statement no longer need to be submitted as a single payment. We can reschedule those statements with a later payment date through ACH. Remote location filed entries that were filed on monthly statement can now be rescheduled for another statement, and the importer or the filer can schedule the month further out than 2 months. So this will allow us to file an entry with an April daily statement date to be scheduled for the July monthly statement. So in this announcement of the deferred duties, there is no regulatory requirement for certification statements. But just to, as a broker, we're always so worried about, if we're advancing duties for a customer, we're always so worried about late files and penalties that get incurred as a result of late payment of duty or as a result of the late filing of the entry summary. It's just ingrained in us that we want something in writing, something very specific, that instructs us as the broker that the importer has reviewed their situation, they've reviewed the requirements, and they're telling us that they do qualify for the deferral. And then the other thing, besides this certification statement that we would be requesting, importers should also, in terms of their record keeping, keep records of any federal, state, and local shelter-in-place orders that have impacted their revenues. So if you're in a state or a county that has been ordered to be on lockdown, if you're in a business that is a non-essential business, you essentially are going to need to be able to document and show how you qualify for this this duty relief as being directly impacted by these shutdown orders and how it's impacted your business. So any record keeping that you can do to prove that case is going to be helpful for you in the event that Customs requests additional documentation 3 months from now, 6 months from now, next year, whenever Customs decides to send their enforcement teams to police this. And I'm not sure when or if or how they'll get to that. Maybe maybe they won't be so compliance enforcement minded, but you just never know. In the current environment, it hasn't always been an importer friendly environment for the last couple of years. So I wouldn't take any assumptions that Customs will just play nice with everybody. So if you're going to take advantage of this program, just be prepared to have documentation showing good faith that you do qualify. So we did draft this week a certification statement that we could use and provide to our clients to send back to us, which basically tells us that the review has been done, that they're clearly instructing Morrison Express to take all necessary actions to defer the duties for the shipments that qualify. But of course, other statements or other information, other written instructions in writing, we review those on a case-by-case basis. So this is not necessarily the only format, but this is the format that we would provide to our clients to place on their letterhead to give us that instruction. So Customs did publish an FAQ document just yesterday on this issue to clarify some of the many questions I'm sure they've been getting and we've been getting. So here on this slide is the web link with that FAQ document. So that ends all the slides and minutia on the COVID-19 related imports and on the late breaking news on the 90-day duty deferrals.
All right, thank you very much, Ron. Again, a pretty silent crowd as far as the questions coming in, and that's okay. Like I said, you can submit them to me at any time. We are recording this session, and we will ensure that all questions are answered whenever they are submitted into me. Again, also, if you are on the line, please do mute your lines. I was trying to do it from my side, but I believe, Ron, you might be able to. So please, out of respect to the presenter, because I can hear interference right now, please do put it on mute. Really do appreciate that, so that everything Ron says, as it's very pertinent, can be heard by everybody that's attending. So as we know here, and what was covered with Ron right now, is the fact that TPE cargo is the most voluminous and priority lift right now, and taking over priority space and lift coming out of primarily Asia, Shanghai, and China itself. So it's not just a matter of getting it here. One of the major obstacles that could be faced are the export formalities. So that's why that portion was touched on as well, so that you can ensure that your counterparts, whether it be your own company or suppliers, are adhering to all the requirements regarding the documentation and permits, so that the export declarations can be properly and timely filed based on space capacity as well. We want to keep everything on schedule so that those relief supplies can make it to the U.S. and get into the proper hands of either personal use or at the hospitals and others. As we see, many of those companies that were already in the medical industry obviously are pursuing that as well. But even those companies where that's not their standard commodity, since their supply chain has had a big impact as far as ability to continue production and sales to their customers and clients, they have made a shift as well into this form of commodity. So it's very critical that they're well aware of what requirements are faced to get them imported into the U.S. So again, if you have any questions, please feel free to email me. It's Kevin_Cordes, CORDES, @MorrisonExpress.com. So if there's no further questions right now, I'll turn it back over to Ron, so we can go to the third section of this compliance webinar.
Ron, I have a question.
Yes.
Yeah, so then you said priority is given by the government for the medical, and you also mentioned that the non-medical also has a priority. And we know air shipment clears in few minutes to about 4 hours, I guess, in average, and ocean shipments in 2 days. So any difference on this priority for non-medical or medical, or both are a priority with the same time frame to have it customs? And
the advantage of the non-medical is that we can clear it without providing any information to FDA. So the FDA is trying to expedite the review of those shipments that are medical.
Right, and the non-medical masks as well, or just the medical ones?
I know, Ron, did you hear that?
Ron?
Did we lose somebody?
Shoot. Rejoin.
Ron?
I may have to rejoin.
There you go, Ron.
Yeah, Ron, we can
Can you
hear
hear
you.
me now?
We can hear you.
Yeah,
Okay, great. Sorry about that.
Yeah, so the
FDA's
question
done a
is,
good job.
Ron, go ahead.
Yeah, FDA's done a good job of expediting the reviews. It's just a matter of, in the case of the Chinese masks specifically, they're really just trying to review that they're legitimate goods and not fraudulent. So if we do a good job of providing product information and photos or copies of any certificates or any other countries' authorizations for those Chinese masks, FDA will quickly clear those. But they are just trying to make sure that since they're intended for medical use, they're trying to make sure that they are legitimate products and that they will be used safely and as intended for the medical professionals.
right, so no medical professionals masks are also expedited if you have all the documentation required, basically.
Right, exactly. Yeah, we haven't really had
Thank you
any
very much, Ron.
goods being held up for any length of time. So we've had some good luck with that, and hopefully that will continue. And FDA really does just want to get these out as quickly as possible, and they're doing the best job they can to screen these quickly.
For no medical as well. Understood. Thank you very much.
Okay, so we're I think we're more than halfway there. We got through the longest of the 4 presentations. So this is a shift away from what we were previously talking about to foreign trade zones. Some of you may already be very familiar with foreign trade zones, and some of you may be sort of a new, or even if you've heard of them, maybe you don't fully understand the purpose or how they work. So this is a relatively short presentation that will hopefully explain those details and see how foreign trade zones may be a benefit. It's another way that our importer clients are looking at whether or not there's a potential cost savings for them, or if there's other benefits in terms of using an FTZ that could help their cash flow. So for this presentation, we're going to look at the FTZ benefits, duties, exemptions, and deferrals, how the FTZ works in terms of the admission process, the weekly entry process, which is the opportunity for merchandise processing fee savings, and a review of the relevant firms. So the benefits associated with using a foreign trade zone will vary depending on the type of operation involved. Foreign trade zones may provide some or all of the following. It could be duty exemption for the goods that are coming into the country and then will be re-exported. Duty won't be paid on those. It may be duty deferral. In those cases, duty is paid when the goods are withdrawn from the FTZ. So instead of paying for the goods at the time of import, while the goods are stored in an FTZ, there's no duty payment made at that time. For importers that are designated as an FTZ that are doing manufacturing or processing within their building that's designated as a zone, there could be duty reduction through what's called an inverted tariff. We'll talk a little bit about that. And then one of the main benefits that we see is merchandise processing fee reduction through the weekly entry process, and also putting goods into an FTZ in order to avoid restricted entry or temporary avoidance of quota. So the duty exemption, that benefit could be where no duty or quota charges are issued for goods that are re-exported. There is an exception for exports to Canada or Mexico under the NAFTA rules. It'll be interesting to see how that's affected by the new U.S.-Mexico-Canada Free Trade Agreement. But duty drawback and duty exemptions are a little bit different for Canada and Mexico because of those rules, where basically there is an exemption, but that exemption is affected by the amount of duties that are paid in either Canada or Mexico. By using a foreign trade zone, the company avoids those duties without having to go through the lengthy duty drawback process, which is a whole other topic and area to look at for another time. But in the case of goods that are destroyed in a foreign trade zone or exported from a foreign trade zone, there's no duties paid on those goods. Duty deferral, again, we kind of touched on just deferring payment until the goods are withdrawn. Foreign trade zone merchandise may move from one FTZ to another as a zone-to-zone transfer without any payment of duty. And unlike a Class 3 bonded warehouse or a temporary importer under bond program, there's no limit on the length of time that the goods may remain within the zone. So in a Class 3 bonded warehouse, there's a 5-year time limit. If you import your shipment under a temporary import bond, there's generally a 1-year limit with extensions potentially up to 3 years. But with a foreign trade zone, you can keep the goods in the zone indefinitely. Most clients would not do that, but at some point the goods will move, but there is no defined time frame that the goods can remain in the FTZ. So the duty reduction from inverted tariffs, that results when a client imports parts or raw materials and then manufactures a new product into the foreign trade zone, and then when they import that product into the U.S. commerce out of the foreign trade zone, it's dutiable based on the finished condition. So if you have a case where what you're manufacturing is a lower duty rate than the parts that go to make that good, then there could be some duty savings due on this concept of inverted tariffs. And also, duty is not owed on the labor, overhead, profit attributable to zone production operations. So, and again, there's savings there on costs that are incurred within the FTZ that don't get factored into the cost of the goods that are withdrawn from the FTZ. So the most common thing that we're seeing is merchandise processing fee reduction. And that's based on the weekly process where all the goods that are withdrawn within a certain zone week are dutiable based on the merchandise processing fee for one entry instead of each withdrawal or each shipment. So there's a minimum 2679 MPF fee and a maximum 519.76 processing fee. So if you have high value goods or large quantity and large value of goods, and you had multiple shipments through a week that potentially could have been $500 each per entry, under the weekly entry process, it would just be a single maximum MPF fee of $519.76. So this really benefits customers with high volume. They're moving a lot of product in and out through the zone each week. And so instead of just clearing those goods immediately and paying MPF on a per shipment level, by sort of consolidating it into a weekly entry, that's where they're getting significant savings. So maximum processing fee is reached for entries with a value over $150,046. And so companies that sell high value products often receive many shipments over this amount. So the example I have here is 10 shipments in a week. If they're valued over $150,046, the MPF would be $5,198. But if processed under a weekly entry under the FTZ, they would pay the $519.76. So you can see significant savings just for 10 high value shipments per week. So under the weekly entry program for that example, the savings for the year, given if you did that every week for 52 weeks, would be $243,000. So significant savings for those high value goods importers that have significant volume. There's other benefits of using an FTZ, maybe better inventory control due to the CBP reporting requirements that FTZs have to do in administering goods entered and withdrawn from FTZ. Additional security, there's strict security guidelines for any warehouse or facility designated as an FTZ. Also, harbor maintenance fee for goods subject to goods, the HMF fee, which is taxed on ocean imports, is paid quarterly instead of at the time of the import's arrival. So that's another version of the duty deferment. And foreign trade zones can also house domestic goods. So there's a lot of sort of freedom of how you use the foreign trade zones that give a lot more flexibility to the previously issued bonded warehouse programs. Quota merchandise may also be stored in an FTZ so that the goods can be withdrawn when the quota reopens. So that's another benefit. Importers of solar products that are subject to tariff rate quotas and other goods subject to either tariff rate quotas or absolute quotas can take advantage of foreign trade zones for that reason. So one of the details is the zone status. And the zone status determines how the goods are subject to duty. So prior to the China trade war and the Section 301 duties for goods from China, the vast majority of goods would enter into an FTZ under non-privileged foreign status. Under that status, the goods are dutiable based on the rate in effect at the time of the withdrawal. But more and more you'll see privileged foreign status because goods under Section 301 for goods made in China are mandated by customs to be entered at privileged foreign status. And goods under the privileged foreign status have to be withdrawn from the FTZ at the rate of duty that was in effect at the time that the goods were entered into the FTZ. So those are the two main zone statuses that are used. So for customers that have a lot of goods subject to China duties, their instruction might be just to enter everything under privileged foreign status. But for other customers that import goods maybe not made in China or not subject to other special duty provisions, they'll probably tell us they want it at non-privileged foreign status, with the idea that, at least before the trade war, in the past, duty rates in general tended to lower with time under previous administrations. So the past practice was usually entering goods under non-privileged foreign status. FTZ can also be entered at domestic status and then zone restricted status. The zone restricted status would only be used for goods that are only eligible for export or destruction. So if you had a shipment that came in that was inadmissible, maybe because it didn't meet labeling requirements for FDA or alcohol, tobacco, and tax labeling requirements, those goods could be placed in zone restricted status. Once the good's in that zone restricted status, it can only be withdrawn for export or destroyed under customs supervision. So the other part that we're going to get to next is how goods get admitted into an FTZ. If an importer has their own FTZ, maybe they're doing processing operations, or maybe they're just handling their own logistics internally, They can get goods delivered automatically through a direct delivery process where goods can just automatically go straight from the import and be authorized on a sort of blanket authorization and direct delivery. And then the goods are reported to customs through concurrence of what the goods arrived on the 214 form, which is the 214 form is customs form for FTZ admission. And without direct delivery, we would send a permit to transfer, and that can be transmitted with the 214 admission data. So we can transport the goods inbound to the importer's appointed FTZ using an inbound process if it's out of port, or if it's within the port. Let's say it comes into LAX and it's an FTZ at LAX, we just do a permit to transfer. So if you're eligible for direct delivery, it does sort of streamline that process, but even without the direct delivery, it is a fairly simple process just to get the goods into the zone. And then, so that covers the admission procedures. And the weekly entry process, as I mentioned, that process, which is very advantageous for tax savings, is a weekly entry process where we file a simplified cargo release filing with an estimate of what's going to be withdrawn that week. And then at the end of the zone week, we finalize the entry summary with the details of what actually shipped out of the zone that week. So the weekly entry process is a little bit different. It's a different entry type than a standard consumption entry. It's a type 06 entry, and it's sort of a two-step process where normally we would follow the entry and entry summary together in one transmission. The FTZ weekly process sort of requires a two-step process. The one thing that an importer needs to review is sort of the savings versus potential costs. If you're going to be storing goods in an FTZ, there could be higher storage costs than if it was just a domestic warehouse because of the FTZ administration requirements and the cost to get set up. Generally, you can expect slightly higher storage rates. Their in and out charges may be different because it's required to be in an FTZ approved facility, which has higher security requirements, which require higher investments by the FTZ. So for those reasons, some of the costs, some of the handling and some of the storage costs may be higher than if you would just simply customs cleared the goods. So some analysis should be done. If you're a smaller importer, LPF savings through weekly entry may not be enough to give you the cost benefits. But if you've got volumes of imports and you're a large enough importer, the MPF savings will be significant enough that it could justify it. If you don't have enough volume for weekly imports, but maybe you don't know until sometime after import whether the goods will customs clear or whether they're going to be exported, there could be duty savings benefits, so that even if the weekly entry doesn't offer significant cost savings, the duty savings for goods that would be exported or the duty deferral aspect of it could give enough cash flow incentive that you would consider using the FTZ instead of doing the immediate customs clearance process that you normally would do. So basically, it does take some sort of internal analysis of the benefits as well as the costs to decide whether or not a foreign trade zone is going to be a worthwhile endeavor for your company. Just getting back to the 214, just showing you the form and the information. It does require most or all of the information that we would need on a regular customs entry, including the HTS, quantity, value, description of the merchandise, the shipment cargo, shipment details, and the zone status. And then just the bottom half of the form, it does allow us to do the permit to transfer for those goods that do not qualify for direct delivery. Generally speaking, third-party use-driven sites like Morrison Express will not qualify for direct delivery, but importer manufacturer-specific sites are the sites that customs may grant direct delivery to. So we're very used to using the permit to transfer process. And in a lot of cases, we just immediately have our goods appointed to either our FTZ or the appointed CFS. In some cases, we have a container freight station for short-term storage in the same facility as the foreign trade zone. So it immediately goes to the CFS, and then once the goods are admitted to the FTZ, we can just move them from one part of the warehouse to another. So I just wanted to share a map and an update on what Morrison Express is doing with our foreign trade zones. We've had a foreign trade zone in El Paso for many years, and last year, just about a year ago, we opened a FTZ in our Chicago facility, which is a 24,500 square foot facility. Our El Paso facility is 60,000 square feet. We are on the doorsteps, very close to being activated in Los Angeles, in our 18,500 square foot facility in El Segundo. We're just in the very final stages of being approved and expect to be approved within the next few weeks. And so we're looking forward to implementing that foreign trade zone here in Los Angeles. We have another foreign trade zone application in Miami, which is in process. We've been approved by the Port of Miami and are awaiting customs activation, which is a sort of a two-step process to be approved. One is an agreement with the port authorities, and then separately an activation process with U.S. Customs. So Los Angeles has also been approved by the port. We have an agreement with the Port of Los Angeles, and we've gone through 99% of the activation process with Customs. We're just waiting for their final review and approval of the posted signs for them to send our application for approval to the port director in Los Angeles. In Miami, again, we expect to be activated hopefully, within the next 3, 4, 5 weeks. But we're hoping that the COVID-19 pandemic, which impacts Customs' ability to do site visits, will not delay us. Customs in Los Angeles has already done the site visit at our El Segundo facility, so we know that they don't need to do a further site visit on that one. So we're excited about those opportunities, and because we're investing in these foreign trade zones, we really look forward to the opportunity to share the information to inform our clients about what FTZs do and what the benefits are, as well as sharing what Morrison Express is doing in terms of expanding our foreign trade zone capabilities. So that is part 3. Thank you all for your patience. We're 3/4 of the way through there. I see that we still have most people have hung on all the way to this point. I appreciate it.
You're entertaining, Ron. I mean, you can make compliance entertaining. We know it's very detail oriented. It's black and white, and there's a lot that goes into it. So it's just a lot of information shared. Really appreciate it on the FTZ. If there are any further questions, please feel free to send them over to me, and we'll get answers for you. We are also here to fully support you from the ground up based on our existing facilities that are certified in El Paso and Chicago, and like Ron mentioned, the soon to be established in Miami and LAX as well. So we'll have you covered completely East Coast to West Coast. So again, if you have any questions, feel free to email them over. We will, whether now or after the fact, as you dig into it a little bit more. So on that, we have reached the 4th and final section of this compliance webinar. And we appreciate everybody holding on. We're still over 50 people in attendance. We appreciate that. We know people's schedules as though there is a slowdown, but at the same time, we seem busier than ever. So we appreciate your time and attention, and pass it back over to Ron for section 4.
Okay, so this is probably the simplest of all these things. Unlike the China duties where there's 25 different lists and unlike the COVID-19 stuff where there's all these multiple emergency use orders, the return goods offers an opportunity for duty-free treatment or partial duty-free treatment, and it's pretty straightforward. So figuring that by this point I might be a little bit fatigued of thinking of all the different possibilities or things I want to discuss, we've saved sort of the easy part for last, where there is good opportunity for duty savings for goods which have been exported and returned to the U.S. So we're going to cover 2 different sections of return goods. One is 9801, which is goods which are returned in same condition, and then 9802, which is goods which were returned after processing or being advanced in condition. So some common issues that we see with 9801 is determining eligibility, the documentation, the exceptions. In terms of 9802, some of the issues that we see are the value splits on which portion is duty-free and which isn't, and also the documentation. But none of this is really complicated, so we'll get started and get carried through with this. 9801, the main issue that we see is getting the right subheading. All these goods under 9801, most of them come under the subheading 9801-0010, which covers goods being exported and returned to the U.S. But there's specific provisions just at the statistical level that we need to know about to get the right provision. 9801-001012 is for goods returned temporarily for repair. Then when we get into 9802, It gets into sort of the minutia of whether the goods are being returned pursuant to a warranty or a non-warranty. The other common issues is we might be missing declarations like a foreign shipper's declaration, or the foreign shipper's declaration doesn't include, the approximate date of export. On the 9802, as I mentioned, getting the value splits right of what's duty-free and what's not duty-free. Those are the key issues. So under 9801, those are the goods that come back in same condition, not improved in condition. So they're not repaired, they're not further processed, they're duty-free. 9802 is for those goods that return after being processed. And so the duty exemption is for that portion of the value of the goods that is the fair market value of the goods as they returned minus the repair processes. So essentially, the values of the repairs or any foreign processing is still dutiable. So if you had a shipment and they were repaired, only the repair value is dutiable, and the remaining value against the fair market price of those goods are duty-free. So 9801-0010, the most commonly used return goods subheading, is products to the United States returned after being exported, returned either for products made in the U.S. or goods returned within 3 years of being exported without being advanced in value. And the other stipulation is that drawback could not have been claimed. So if you claim duty drawback at the time the goods were exported, you are then not eligible to also claim duty-free treatment at the time the goods are re-imported. Generally speaking, goods are considered dutiable every time they're imported into the U.S. unless they qualify for a special provision. So in this case, 9801 is a special provision with that caveat that if drawback was claimed, they're not eligible for this 9801 returns goods provision. So what's required is fairly simple. We need a couple of forms, a declaration by the owner or importer and a declaration by the foreign shipper. And generally that's good enough for us as brokers, but there is the possibility that customs could require additional information. Another common form that's used is the manufacturer's affidavit. So especially if the importer was the manufacturer of the goods, a manufacturer's affidavit is usually provided. Even though the language is very similar to the owner-importer's declaration, the statement is from the manufacturer sort of proves that the goods were manufactured in the U.S. If the goods were manufactured in the United States, then that 3-year window to have them returned doesn't apply. So that's where having a manufacturer's affidavit for goods made in the U.S. is more advantageous than just the importer-owner's deck. And then obviously the export invoice, the export documents from when the goods were exported from the U.S. could also be required, especially for goods that were not made in the U.S., where you have to prove that the goods were exported and returned within 3 years. And any other documentation or evidence necessary to substantiate the 9801 claim. So here's the format as prescribed in the regs for the declaration by the owner or importer. Fairly straightforward. You're saying that the goods, the declaration but from the foreign shipper is correct, and to the best of your knowledge, the articles are manufactured, by the name manufacturer, and you add your date, company name, signature, and your title, and that's pretty much all there is to it. In terms of the importer owner's declaration, the regulations stipulate that these listed company officers sign on behalf of the company, but it could also be any other authorized employee. So the regulations actually make it very similar to a power of attorney, but on a practical level, we do see these forms signed by people with firsthand knowledge of the product that may be in management, that may not be president, vice president, corporate secretary, or treasurer. And customs, in reviewing these documents, it would vary from port to port and by customs officer to customs officer. I just have not practically seen customs fully enforce this in the same way that they enforce power of attorney. But if you happen to have time on your hands and you want to do some reading and you read the regulations, this is pretty much what it says. So if you have insomnia, I highly recommend 19 CFR Part 10, which covers return goods. Read a few pages of that and you might cure your insomnia. But anyway, there you go. And then the foreign shipper's declaration, the reason there's two declarations is the declarations sort of support each other and serve separate functions. The foreign shipper's declaration is made by the shipper, and they're saying that to the best of their knowledge, these goods were exported from the U.S., and that while they're in the foreign shipper's declaration, they have not been advanced in value. And then conversely, the importer owner's declaration is referencing the foreign shipper's declaration, and they're saying that, yes, we also certify that the foreign shipper's declaration is correct. So at a port director's discretion, Customs has discretion where they could waive these requirements for the documentation. And this would be rare, but I have actually seen it happen. And in the cases where Customs has waived the documentation, it's typically been when they've audited an importer. And when Customs does an import audit, a focused assessment, they always look at special provisions. So if you're an importer and you use free trade agreements, or you use 9801 or 9802, if you're being audited in a focused assessment, 100% guarantee they're going to look at how you control these sort of special duty-free provisions. So I've seen it two different cases in my experience where importers showed Customs that based on their importer internal controls, their system's ability to track the imports, the exports, and the returns based on SKU numbers, purchase order numbers, information in their purchasing system or inventory systems, Customs has been satisfied that when the importer states that the goods are eligible for 9801, Customs is satisfied that if called upon, they can prove it. I've only seen this in a couple of cases, and it's usually for customers that have, very advanced and capable internal systems where they have proven to Customs that their internal controls, they internally vet that the goods qualify. And based on that, I've seen 2 importers get waivers of these documentations. But for the rest of us, for the 99.9% of the rest of us, we do have to chase down these forms. And we prefer to have those forms at the time of entry, whenever and wherever possible, so that if we get a request for documents from Customs, either at the time of entry or 3 or 6 or 9 months down the road, we have it in our file, and we don't, have the unfortunate circumstance of maybe not checking if we get a later document request. It prevents us from sending documents without those declarations, where Customs could maybe review the documents and then decide that the goods are dutiable. So that's why you'll get pestered by our brokerage team. If we see that the goods are return goods, we'll probably be asking you for these declarations. In the case of a foreign shipper's deck, there is the opportunity to have that statement on the export invoice from the shipper. And if that foreign shipper's declaration is included on the commercial invoice, then that's one less form that we need to request. The other opportunity is if you issue instructions to your shippers and exporters to include that foreign shipper's declaration, because in advance it's a return shipment, and then all we'll be asking for is the importer's deck or the manufacturer's affidavit. It'll help us get the goods cleared duty-free more quickly by getting those declarations in advance. So I know that sometimes clients wonder why we ask for all this additional information or additional forms, and it's really only for our shared responsibility and mutual benefit that we have everything in the files that we need to show Customs that your goods do qualify to be duty-free, do qualify to be at a reduced duty. And we're really just trying to both look out for our internal record keeping as a broker and also look out for our clients as best as we can. So I thank you all for your patience and for sticking in. We've just got a few more slides with other 9801 provisions that are less often used for your information. There's specific provisions for goods that were exported under a lease agreement. There was provisions for goods exported within 3 years and returned because they do not conform to sample or specs. I mean, honestly, I really don't see that as useful anymore, because they changed a few years back. They changed the 9801-0010 provision to include goods exported and returned within 3 years. That provision previously only included goods made in the U.S. But Customs hasn't gone around to cleaning up some of these older provisions that may or may not be useful anymore. There's specific provisions related to aircraft engines and propellers that were exported under loan, lease, or rent as temporary replacements. Goods reimported for exhibition in connection with a circus or a menagerie. So some of these are things that we're not going to commonly see, but you just never know. Every day I run into situations, even being in this business for over 25 years, I always learn something new or come across something I'd never seen before. So anyway, I just wanted to provide this as just to provide complete details of what 9801 entails, as well as these provisions for professional books and instruments, tools of the trade that are reimported by the exporting party, and articles entitled to duty-free treatment under There's also these sort of specific chapter notes that reference goods under 9801-0080. So I don't want to get too much into the weeds on that, but I just wanted to share that there are some other special provisions. For partial duty-free treatment under 9802, again, that does not apply to goods that are exported, that had drawback or that were exported due to admissibility with partner government agency admissibility requirements. They're not eligible if they were exported after manufacture under a TIB under 9813. And they're not eligible for goods that were returned after customs had goods exported with goods under customs custody. So it might be like a refusal by a partner government agency or a customs refusal where the goods were exported and then the duty was refunded because of entry cancellation. So when goods are re-imported under those circumstances, they would be dutiable. And then here's the 9802 provisions. For goods exported for repair, we need to know if they were repaired under warranty or if they're repaired not under warranty. And then the other requirements for 9802, metal articles processed in the U.S. exported for processing, re-imported for further processing. And again, for 9802, the document requirements are very similar to 9801. There's a foreign shipper declaration that in this case would be a foreign repair or foreign assembler's declaration. And that declaration will detail the repairs and the cost of assembly or production done by the foreign shipper. There's a declaration by owner and other documentation which may be deemed necessary by the port director, which could be the foreign customs entry, the export documents, invoice, foreign assembler's declaration. The foreign assembler's declaration or foreign repair declaration must segregate the value of the goods in exported condition and outlay the cost of the repairs along with the fair market value, even if it's no charge goods. So again, 9802 deals with cost of repairs as well as the remaining value of the goods. And we'll just get to showing you the declarations. Again, it would be very rare for the port director to waive these document requirements, but it could happen. So here's the foreign shipper's repair declaration sample, where we show the description of the goods, the full cost of the goods, and the cost of the repairs. And here's the declaration by owner. You know, fairly simple, straightforward forms. The foreign repair declaration is really, really important because this is where we get the value split of what will be duty-free, what is dutiable. And for goods which have U.S.-made components that are exported ready for assembly, those U.S. components have not lost their identity when they're integrated with other goods. Those can also qualify for partial duty-free treatment under 9802-0080, and that's for U.S. components assembled abroad or shipments returned to the U.S. with U.S. components that were assembled with other items while abroad. And again, that also requires the foreign assembler's declaration and the endorsement by the importer. Waivers can be granted, but again, it would only be granted probably with an importer that had undergone an audit and had proven that through their systems and internal controls that they can track these things at an acceptable level to U.S. Customs. And then lastly, 9802-009000 applies to textile and apparel goods assembled in Mexico from fabric cut to shape in the U.S. So anyway, again, most of the goods that we would clear would be, you know, the simple return after repair, but I just wanted to share the details of the other provisions that are applicable. And that is finally all that I had on those 4 subjects. I appreciate the very many of you that stuck through the whole thing. I know it's not these subjects are just sort of straightforward, but for those of you that didn't already know the information, maybe you picked up something or learned a little bit more inside of why we request certain documents or certain information. And hopefully you found at least some of the information useful, and I appreciate all of your time. If there are any questions on this, we can cover them here. We do still have a little bit of time if there are questions.
And thank you, Ron. We appreciate it. Again, the information shared is very detailed and very critical for all of our companies, as we know and stated before. compliance is key. Compliance is critical to keep our operations running. And we can also seek opportunities within our companies to take advantage of compliance regulations and changes within the industry to improve cash flow and tax refunds and everything else associated to support our supply chain. We did get a couple questions through the chat as well. And one thing I wanted to touch on, and we just briefly did previously, is regarding the PPE exports primarily out of Asia. As we know, it is the highest volume, highest priority of uplift, or the PPE related products. We are seeing that with the volatility of the market on a daily and weekly basis. And one thing that obviously has grown a great impact has been the cancellation or suspension of many of the passenger flights through the outbreak of the COVID-19. And with that, we've obviously lost a lot of the belly space to utilize for cargo movement. And we've also then seen a utilization of freighters to support the PPE cargo, which is very voluminous cargo, as mentioned before. So you're not getting the same type of density factor on these aircraft and the same type of uplift capabilities when it comes to it. We're also seeing freighters being converted to charters in areas as well, which are the rates are spiking with every day, something that my bank account cannot handle. So with that, we don't know exactly when this trend will end. It will obviously take those experts in the field see it 3, 6 to potentially 1 year out in advance before all the aircraft are circulating again and back to their normal flight pattern and get them in full operation. So we're going to continue to see this impact across the globe right now, as we're not just managing this as the USA, but it is a global pandemic that has spread throughout every country with shelter-in policies, not just impacting the airport-to-airport or port-to-port movement, but also the domestic movement within these individual countries simply based on complete shutdowns. So it's something that we stay very well abreast on. We can provide and have provided market outlooks to clients, as well as updates on the capacity issues and any changes in vessel sailing, flight schedules, for cancellations, suspensions, or additions as well, so that we can manage it on a day-to-day basis. It is a continuous topic of discussion that we're managing throughout Asia, again with the primary export location out of China and really Shanghai. So that was one of the questions that was raised, and any further questions on that, we'd be happy to answer them on a one-to-one level as well that's specific to your business. We have the resources available to us to share with you. And again, like Ron stated, we hope that out of the 40 plus that are still in attendance right now, we thank you very much for your interest in this event. And we do hope that you're able to take home some very valuable information. Actually, let me just, if I can remove that for a second. And I will get to that part. I have seen it. You guys get to see me one more time. I do apologize again. I think you can see me. Let me go back and make sure I'm up here. There I am. So we do, again, hope that you were able to take home some very valuable information, whether it's 1 or 2 bits of it based on those 4 sections that Ron covered in great detail, that you can pass through with your operations, with your teams, with your clients, vendors, and customers worldwide, that is beneficial to your whole operation and your organization as we do work through this unprecedented time together as a community. So we have had some questions come up on the chat box as well. We will, and have stated some join a little bit later, we have recorded this session, and we will send it out to all those that did attend, and even those that weren't able to participate based on conflicts of schedule. So you will get the full version of this webinar, compliance webinar. And in that, we will also include, again, my email address and Ron's email address, so that any further questions that do surface, feel free to reach out to us. We are your experts in the logistics industry. We want to be your partners. For many of you, we already are your logistics partners. For those that are not there yet, we look forward to working directly with you and supporting you with anything compliance related. Outside of that, I don't, let me check just to make sure. Another chat just came up here. Make sure I have all those covered. Yep. So majority of it was, for those that actually missed a little bit, just wanted to make sure that they're going to get a copy of this, which again, you will absolutely be able to get a copy of it. It will be in PowerPoint or PDF form, however it's necessary for you to receive it. Again, we thank you all very, very much for your time and attention and interest in this compliance webinar. It's the first that's been put together by Morrison Express. We look forward to doing many, many more. We also will be happy to take suggestions from the clients, prospects, and our MEC team on future webinars and hopefully face-to-face seminars as we go back to the old normal and get away from the new normal. I know we all cherish and love our family very, very much and getting a lot of QT with them, but a lot of us are also going stir crazy at the same time, and we want to get out there and see your faces and sit across and hopefully be able to shake hands or even still just bump elbows. So with that, we will end this session, but I'll first put out there, are there any further questions from anybody in attendance right now? All right. Well, on that, again, thank you very, very much. If anything pops up after the fact, please feel free to reach out to us, and we will send this information to you. And again, a special thanks to Ron Levy, our Director of Compliance, for putting all this material together. Damn, dude, we look like brothers. We look like brothers. It's hilarious. I guess that's what old couples do. They just look similar as they grow older together. But thank you again for putting this all together and being very thorough with your data and information shared. So I wish everybody great health, and we look forward to working with you all in the future as this all lifts. Thank you all very much. Stay safe.
Thank you all for attending. Stay safe.
Thanks.
Thank you guys very much. Very helpful.
Thank you.
Thank you, Kevin, for putting it all together.
Hey, it's my pleasure. Thank you. You did all the hard work. I just had to shower today. Well, that's perfect. I'm going to go ahead and end it off here, and we'll talk after this.
All right, sounds good. Talk to you later.
Thanks, buddy. Hi, man. Bye-bye.